All right, y'all, we are live and welcome to the Thriving Money Show. This is the show where we're going to show you how to multiply your money, help you to make money 2 to 3 times off the same dollar. So I cannot wait to really help you, y'all. This is my first, but technically, if you account the last blooper, which you got to go back and watch it, it's absolutely horrible. This is technically my first live recording ever. And we're going to give you heat. Look, what I realized, you all, is that I continue to go on to everybody else's YouTube, everybody else's podcast. And when I got on, people would get like 100,000 views, 250,000 views, 700,000 views, etc. And yet I didn't even have my own YouTube channel. So this is my first ever crack at YouTube success. And I'm going to go out and I'm going to start teaching you right away, you all. What I'm going to do is show you today how, well, I'm going to introduce myself and I'm going to show you how we can actually utilize life insurance to build wealth. I'm going to break down life insurance to you in a way that you've never seen life insurance broken down. I'm going to show you how to build more wealth and pay agents 70% less, so most of that money goes to you. I'm going to show you how to leverage that to buy assets so that you can make your money work 2 to 3 times off the same dollar. So I'm Marvin Mitchell. I'm a Hall of Fame financial advisor. Been an advisor coming on 18 years now. Was elected into the Hall of Fame in my industry, in my niche, back in 2021, and super proud of that. I'm independent, full service advisor. We specialize in everything, investments, assets, anything that you could think of. But what I've become known as is the life insurance cash value, become your own bank guy. So at some point, I just realized I needed to embrace it because, hey, that's what people know me as. So today, what I'm going to do is I'm going to pull up my screen and we're going to go over a couple of things that I'm excited about. So what that is this is the Path to Prosperity Blueprint, the road to millionaire status. So look at this tool, y'all. This is going to be pretty cool. You ready? Bam. Let me make it smaller. All right. So this is Path to Prosperity, the road to millionaire status. So let's go ahead and get going. So if what you thought to be true about money turned out not to be true, you all, when would you want to know about it? Well, hopefully the answer is today. If it's today, write today in the comments below, you all. Now, there is a circle of knowledge in the universe. Circle of knowledge in the universe. So this is all of the knowledge that you will ever know in the universe right now. Now, there are certain things, you all, that you know to be true. For example, I know how to tie my shoe. I know how to properly eat. But there are also things that I don't know. Now, if I know that I don't know it, then guess what I can do? I can look it up. If I don't know that I don't know it, I can simply go to YouTube and look it up. But what about the rest of the universe of knowledge, you all? Now, in the rest of the universe of knowledge, understand these are things that you don't know that you don't know. If you don't know that you don't know it, how can you look it up? You can't look it up because you don't know that you even needed to look it up in the first place. So you need to be exposed to somebody, a mentorship or an environment that are showing you things that you have never even thought about, or that you have never even heard of, or that you didn't know even exist. Or maybe you need to unlearn some things so that your mind can be free to learn something new. Now, I got a question for you all, and I want you to write this in the chat. What color is a stop sign? What color is a stop sign? Put it in the chat below. What color is a stop sign? Okay, great. How many sides does a stop sign have? Exactly, 8, right? Now, what do you do when you get to a stop sign? Well, you're supposed to stop. but many of you roll through that stop sign, right? But we're going to go ahead. This is easy, you all. Just go ahead and guess. This is very easy. What color is a yield sign, for example? Super easy. If you said yellow, you are incorrect. A yield sign is red and white. Well, I know what you're thinking. You're thinking, wait a minute. I know I saw a yellow yield sign. They must have just changed it. They did change it back in 1974. So this has been a yield sign red for a long time. So every time that you drive by a yield sign and you see that it's red and white, I want you to think of me and think of this lesson that I'm teaching you today. So if it's true that a yield sign, which is something that you see on average 7 to 8 times per day, if that's true, could it also be true that you have some things that you need to unlearn about money that you thought to be true that are not necessarily true? Is it possible there are some things that you don't know about money that if you did know it, it could help you to change your financial situation? The first time you played tic-tac-toe, who won? Was it you or was it the person that showed it to you? Was it you or was it the person that showed it to you? The person that showed it to you because they understood the rules of the game. All I want you to do is the same thing. If I can help you to learn and understand the rules of the game, then you could be on a similar playing field, right? Because the problem is that in this society, we have been like robots. We have been like robots. We have been taught to go to school, get an education, get a job, save for in your 401k, pay off your student loans. One day when you're 65, you'll be able to retire on less money than you're making right now. And oh, by the way, you have to pay taxes on that money. 70-something% of people run out of money in retirement, but yet we are being taught to follow this same system where Social Security is set to potentially be in trouble by 2034, that pensions are already going away, that people are paying these high interest and credit cards on consumptions and debt. And instead of following this system that has held us back, what I want you to do is I want you to think about the holes that are in your bucket. Yes, the holes that are in your bucket. Look at this, you all. Many of us, we go out and we attempt to just make more income, make more money. But the problem is you see that a lot of times you're making more money and it seems like the more money you make, you still end up in the same situation. How do you end up still being in financial trouble? How do you end up doing so when you're making more money? It's because you're leaking money out on the backside. Maybe you're overpaying in high interest debt. Maybe you have opportunity costs. Opportunity costs is the things that you could have had you not spent the money. Maybe you're overpaying in taxes. Maybe you're paying high interest rates on certain things and you don't understand the interest rates gain. Maybe you're paying overfunding your 401k. Maybe you're paying extra towards your house. Maybe you're doing the things that you thought were true, saving in the 529 plan, but it's actually leaking money out on the back end. And it's simply all you have to do is learn the right way. But what if we could just fill up that bucket? If we could just fill up that bucket, you all, I want you to look what happens. We can make money at the same rate, but end up with more money because it's no longer leaking out on the backside. You have to learn how to do this, and you got to learn what type of person you are when it comes to money. There are actually 3 money systems. There are 3 types of money systems, you all, that you have to be aware of. And I want you to identify which one are you when we talk about these 3 money systems. The first person that you have is a debtor. Now, the debtor, they go into debt and then they spend their life attempting to become debt free. Then what do? They go back into debt and then they spend their life attempting to go debt free again. They go back into debt and then it's the same thing. This is called the rat race. They are in the rat race. We don't want the rat race. What we want is we want you to not have a goal to just get out of debt so that you can just simply get back to zero. No, why would we do that? Understand that if your only goal is to get back to zero, I want you to understand what's happening. You're essentially having a goal to just survive. We don't want you to survive. We want you to thrive. There are homeless people on the street without debt but that doesn't mean they're in a better financial situation than you. Not at all. They don't have assets, right? What I want you to do is not be a debtor. I want you to be a wealth creator. The second type of person, they are a saver. They are a saver. What that means is they're going to save, and then they're going to pay cash. They're going to save, and then they're going to pay cash. They're going to save, and then they're going to pay cash. Well, what is the problem with that? Every single time they save just to pay cash, they are losing the forward momentum of their money. Yes, think about it. If I have $100,000 and I pay $30,000 in cash, what am I doing? I have $70,000 left that I'm earning interest on, but I'm no longer making any interest on that $30,000. Does that make sense? But what if I was able to keep that $30,000 and still spend the same thing I was going to spend anyway? What if I leveraged the money I already had and I was still making money on $100,000, even though I used $30,000 to buy an asset? Well, my money will continue to compound interrupted as if I never touched it. Right? So here's the problem with the saver. They're going to save, and then they're going to have this scarcity mindset and think they can't spend anything and try to live cheap, try to live like they never lived to make sure they're frugal. They're eating ramen noodles. And what that does, it actually attracts lack. Think about it, the law of attraction. The more that you think about abundance, the more that you have abundance. The more that you think about lack, the more that you attract lack. The same thing happened to me. I lived in a small house. I lived in a very small house. I lived in a very, very old car that was like an '07 Ford Taurus, and I wanted to drive it until the wheels fell off because I had no debt. Now, on the surface, that sounds great. But the problem is I still was broke. I was saving money, but I was still pretty much broke. How does that happen? It's because I was attracting lack. There are people who even are doing well. I got clients as a financial advisor that are making millions of dollars, but they're still afraid to spend any money. I have one client that has $5 million that was afraid to spend $10,000. Why? Because she's still stuck in that limited scarcity mindset. Understand that just because you have the money doesn't mean you get out of that mindset. The same way that a fat person that loses a lot of weight might still be in a fat mindset if they haven't developed the mindset. I want you to understand that I want you to have an abundant mindset, and I want you to be a wealth creator. I want you to get your money out of prison, which is a lot of people doing. Their money is locked up in prison. They're saving in a 401k, and they can't touch that money until they're 59 and a half. They're putting extra money toward the house thinking that that's the best thing. But if they lose their job, they can't even access that money because the banks are going to request a 14-page document. And if you have no income coming in, you can't get that money. You have no liquidity, no use, no control of your money. But what I want you to do is be a wealth creator. What the wealth creator does is that they, like the green line, they never, ever, ever, ever stop the forward momentum of their money. They never stop the forward momentum of their money. In fact, when they spend money, they're going to borrow against their own money, and then they're going to pay it back if they choose to. They're going to borrow against their own money, and then they're going to pay it back. Why is that important? Because when they're borrowing against their own money, their money continues to compound as if they never touched it. I'm going to explain that to you in a second. But what we want to do is we want you to create pregnant money. That means we want your money multiplying. We want your money making money 2 to 3 times off the same dollar, 4 to 5 times off the same dollar. We want each money to reproduce after its own kind so that you're building generational legacy wealth and you're becoming the wealth creator. So let me show you all how the wealth creator looks really quick. All right, so I'm going to show you all about the wealth creator. Now, this is going to be really, really cool because you're going to see how much money you're actually losing unknowingly and unnecessarily. And we can change all of that once you learn the principles of a wealth creator. So this is going to blow your mind. All right, here we go. I found it. All right, thank you for your patience. Let me tell you the quick problem with the saver, problem with paying cash. All right, so first, problems with paying cash. Well, first, you actually have to first save the cash. That's a lot of hard work. Then you have annual tax leakage, which means you got to pay taxes on that money. Then you must drain the tank, which kills the compound interest of your money. And then you lose control in the interest you could have earned had you not drained the tank. So let's say hypothetically you were saving $25,000 per year and you were earning 8% on your money. And let's say we saved this for 30 years, you all. Let's say that every 5 years we drained our tank. So that means every 5 years we drained our tank. And let's say we refilled this. We did this 5 times over the course of that 30-year period. What I want to show you is a dramatic difference, you all. So first, the red represents the times where you saved and then you paid cash. 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 The green represents, yeah, you still bought the same things, but you never stopped the forward momentum of your money. It continued to grow uninterrupted. So let me tell you this. You saved the exact same thing. You spent the exact same thing. You earned the exact same interest rate. The only difference is that you allowed your money to keep compounding as if you never touched it. So as you can see here, let me move my screen. As you can see here, you all, we're looking at $3,083,647 if you did it the way that I'm teaching you, yet you only have $183,398 doing what most people do. That's a difference, you all, of over $2.7 million doing the exact same thing. Which one would you rather have? $3 million or $183,000? This makes a huge, dramatic difference in your wealth. This is what I mean when I say a lot of people are losing money unknowingly and unnecessarily. All right. So let me show you something about life insurance that I need you to know. What ideal characteristics do we want for your money? Okay. And I'm telling you, life insurance actually has most of these things. So I'm going to show it to you. Here's what we're going to want. Number one, we're going to want tax-deferred growth. Tax-deferred growth. That means we don't want to pay taxes as this money is growing. We also want tax-free distributions, which means when I want to borrow against this pot of money, I want to borrow against it and have tax-free distributions. The next thing that we want, competitive return. Absolutely. We want high contributions. We want deductible contributions, if possible. We want collateral opportunities, which means I want the ability to borrow against this money as it continues to grow. I also want it to be safe. I want no loss provisions, which means that I just don't want to lose my money. I want guaranteed loan options. That means that no matter what my credit score is, no matter if I lost my job, I want the ability to go borrow against my money if I need to without filling out an 18-page, 14-page application. I want unstructured loan payments, which means I want to be able to pay back the money when I want to pay it back, not when the banks want me to pay it back. In fact, if I never pay it back, I never wanted to hurt my credit score. I never wanted to affect me. In fact, it would be great if I never paid it back and they just simply subtracted it from my death benefit when I die plus interest rate. That would be a pretty cool thing. I want liquidity, use, and control of my money, which means I don't want to have to wait until I'm 59 and a half, like we have to with the 401k or like we have to with an IRA. If I'm 30, if I'm 40, if I'm 45, it doesn't matter. If I want to start a business, I want to be able to borrow for that money without anybody telling me that I can't. I want liquidity, use, and control of that money, and I also want additional benefits, if possible, right? So these are the things that I want when I'm managing my money. So I want to show you all how permanent insurance works to build wealth as a private reserve. So the first thing I want to show you is this right here represents, the green represents your policy cash value. This building represents the insurance company. These things, the wedding dress, the car, represents things that I will go out and purchase, education, etc. So what I'm going to do when I'm using life insurance, I'm actually going to go, because I built up the cash value first, I'm going to go to the insurance company and say, I need to borrow against my cash value. They're going to give you the money within 2 to 3 days, and they're going to take a lien against your cash value, which means if you don't pay it back, they're going to simply subtract it, right? Then you use that money, get an interest-only loan, and then you're going to go out and buy, hopefully, an asset, and then you're going to have non-structured payments, which means that you pay that back to the insurance company when you want to, and as you pay it back, they're going to decrease your collateral. They're going to decrease your collateral, which means that now you're going to have more money into your cash value, and it was continuing to grow as if you never touched it. So you just essentially made your money continue to grow for you. So the best way to explain this, you all, is let's say you have $100,000 and you're earning 5% interest. Let me kind of take my screen because I want you to focus on me. You got $100,000 and you're earning 5% interest. 1 year later, how much money do you have? Yep, you still have $105,000. Right? That's 105,000. 100 plus the 5% interest, 5,000. 100 plus 5,000 is 105. Let's just say we had $100,000 in cash value that was earning 5% interest. But this time I borrowed $30,000 against my policy. 1 year later, how much money do I have? I got 100,000 earning 5%, but this time I borrowed $30,000 against my policy. How much do I have? Write it in the comments. If you said 105,000, you are correct. The money is still continuing to grow as if you never touched it. Borrowing against the policy does not affect the growth. If you don't pay it back, it's simply subtracted from the policy when you die. I need you to share this with about 30 people and put some mind-blown emojis on this, because I'm telling you, this is the stuff that's going to change people's lives, and you got to share this. Subscribe to my channel, and I want you to continue to share this with as many people. Why? Because if your account is going to grow the same, whether you borrow against it or not, what should you do? Should you borrow or should you not borrow? Absolutely, you should borrow, right? Well, when you borrow that money, should you buy an asset or should you buy a liability? Absolutely, you want to buy an asset. Because why? Because now you're earning money on the life insurance policy, and you're actually earning money on the asset at the same time, right? Most people, even when they get the life insurance policy properly structured, they don't borrow against it, which defeats the entire purpose of allowing it to work for you. Life insurance is not a replacement for an investment. What life insurance is, it's a wealth creation fund to funnel your funds through first, so that now it continues to grow as if you never touched it. Then you borrow against it, and then you go out and get your real investments. It crushes me when I hear life insurance agents giving misinformation, telling people, oh, don't do that because life insurance is an investment. Buy term and invest the difference. No, I want you to do both and, not either or. Buy the permanent policy with the high cash value, borrow against it, and do the investments. So you buy permanent high cash value and you invest it. But instead of investing the difference, there is no difference because your money is continuing to grow as if you never touched it. That is the key. So what I want to do really quick is give you all a really quick lesson on life insurance. All right. So this is a really quick 10-minute lesson on life insurance. So what if you all, what if there is a minimum amount if let's say you're going to get a $500,000 death benefit, and I'm about to teach you what more than 95% of agents know, or at least more than they're willing to show you, because if you knew this, they're going to get paid 70% less. So make sure you hang on to this and share this with some people. Okay, 500,000. There is a minimum amount that you can purchase to get a $500,000 death benefit, or there's a maximum amount that you can pay to get that same $500,000 death benefit. Who do you think determines the minimum? Who do you think determines the minimum in this policy? There we go. Who do you think determines the minimum? All right, the answer is not you. The answer is actually the insurance companies, because the insurance companies, they have actuaries who actually will go out and calculate this and say, well, how much could this, what's the least amount that they can pay us where we're still profitable? Now, next question. Who do you think determines the maximum amount you can put into these policies for the $500,000 death benefit? If you said you, that's incorrect. If you thought to yourself, the insurance company still, you're still incorrect. It would be the government. The government. Now, I know what you're thinking. Why would the government ever be concerned with how much money we're dumping into a life insurance policy? Let me ask you this. Why would the government be concerned about anything when it comes to money? What does the government care about? What do they want to get from you? Taxes, right? See, when you dump money the correct way into these life insurance policies, you never have to pay taxes on that money again, right? Back in the old days, wealthy people used to put millions of dollars into these types of policies because they knew that they would never have to pay taxes. It's like a Roth IRA on steroids, right? Plus they got those additional benefits. Well, in the 80s, the government basically came and said, so there's infinite product designs to help you to do this, right? But in the 80s, the government basically said that if you overfund this policy, we're going to treat it just like a qualified plan, which is like your IRA, your 401k, your SEP, or your 403b. These are plans that the government, they care about. Why? Because it is the government's savings plan and not just your savings plan. What do I mean by that? When you put money into the IRA, this tax deferred, and it's growing, they're going to tax you on the backside at whatever the income rates, ordinary income rates are. So the government has full control. They can raise taxes if they want to, and every dollar that you put into that policy, into that account, is going to be taxed at that higher tax value. So that's not the right move unless they offer you a match, then you want to contribute to a match. If you overfund this, it's going to be called a MEC, which is a modified endowment contract, which means then they're going to tax your money the same way they would tax an IRA, 401k, SEP, or 403b. So we want to make sure we're very careful. This is why it's very important to talk to the right agent. This is why it's very important to talk to my team. And you can talk to my team by going to wealthcreationcall.com. That's wealthcreationcall.com. Now, if the minimum amount that I can pay into a policy was $500, right? And a maximum amount that I can pay into a policy is $10,000, why would a person ever pay $10,000 into a policy that they could have got for $500? Well, let me ask you a question. When you pay the least amount in a policy, what type of life insurance is that called? It's called term. Now, term has no death benefit. It only has a death benefit. It has no extra benefits, cash value. Many people think that life insurance get richer off of whole life, but that's actually not the case. They make more money on term life because only 3% of term life policies are ever executed because people either cancel them or they expire, and they never have to pay out the death benefit. But on whole life, as long as people continue to pay their premiums, they have to pay it out to your beneficiaries, right? So if you're going to pay $10,000 for a policy that you can get for $500, it better have some great benefits on the extra amount that you're putting into your cash value. So it actually does. It has tax-deferred growth, tax-free distributions. You're going to have a competitive return. You're going to have very high contribution limits. You're going to have additional benefits. You're going to have collateral opportunities. That means the ability to borrow against this money as it continues to grow. It's going to be safe. You're going to have no loss provisions, which means you can't lose it. You're going to have guaranteed loan options. You can get a loan anytime you want. Unstructured loan payments. You can borrow from it and you don't have to pay it back if you don't want to. And if you do pay it back, it's on your time, not the bank's time or the insurance company's time. You also have liquidity, use, and control of your money, which means you can tap into that money and touch that money at any given time, right? So these are some things and benefits that you have when you're looking at your life insurance policy. Now, you just learned more about life insurance policies. I'm going to show you one more thing. There are infinite ways to fund this policy, but the way we're going to do it, we want to fund it for the lowest amount of death benefit for the highest amount of cash value. And this is called the maximum efficient contract. And if we really structure it the right way, we can have an increase in death benefit, which means that your death benefit is going to grow as your cash value grows. So this is very important. So I just taught you more about life insurance than most agents will ever tell you, at least more than they're willing to admit. That will show you why are wealthy people dumping a ton of money into life insurance. But I got something for you. This is not just for the wealthy. Almost anybody can do this and still take advantage of the same benefits. I have people who are dumping hundreds of thousands of dollars a month into these policies. Then I have people doing as little, there are people who are doing as little as $150, $200 a month. So if it makes sense for you, there are also ways that you can structure these policies if you are a debtor that can help you get out of debt like 3 times as fast. I'm telling you, there are so many ways to build wealth or eliminate debt with these policies. It's crazy. But what I want you to do is go to wealthcreationcall.com, and that's going to show you how we do this. Now, what I want to show you next is I want to show you how I've used my policies. So this is how I have used my policies. So I'm gonna show you how I use my policy, but first I forgot, I need to make sure that you understand which type of insurance do you choose, because there are 2 different types of permanent policies, you all. You have the whole life when it's properly structured the right way, and then you have the index universal life. A whole life is good because you're gonna get a fixed rate of return. Let's say that return is 4%, 5%, whatever that return is, your return is going to be fixed, which is awesome. But the thing about that is you can borrow from it quicker. You can borrow from it as soon as 30 days. The downside is you're not getting as much return. The second type of policy that you could get is called a fixed IUL, Index Universal Life. When you get an Index Universal Life, the way it works is, let's say if you have a cap of 12%, that's the maximum amount that you can earn. If the market makes 5, you can make 5. If it earns 10, you can earn 10. If it makes 12, you can make 12. If it makes 15, the most you can make is 12. And if the market loses, you don't lose. So you can make up to 12%, but you never lose on the downside. It's kind of like going to the casino, and the casino is telling you, if you win, we'll give you some of the money, but if you lose, you can at least get your money back. Anybody would do that, but that's exactly how an Index Universal Life policy works. So how have I used my wealth creation fund? So first, I borrowed from my policy to buy a 76-unit property. When I bought this 76-unit property, it earned me $4,000 to $5,000 per month. And what's so cool about this is that I partnered with some people to do this and borrow from my policy. So my policy was continuing to grow as if I never touched it. And I just took the proceeds and began to pay back off my life insurance to increase my borrowing capacity in the future. I've also used it to buy this house in Atlanta. This is a $2 million house. Now, when I bought this house, you all, I was still living in St. Louis. Why would I buy a house in Atlanta when I'm still living in St. Louis? Because I use this to rent it out to people doing masterminds, to people filming movies, for Airbnbs, etc. It was making me up to $20,000 to $30,000 a month, and I still lived there when I went back to Atlanta. And my mortgage was only about $8,000 to $9,000 a month, so it was a profitable endeavor. I actually used this luxury to make me money. So you don't have to live poor. You can actually turn your luxuries into assets if you do it the right way. I also use it for options trading. I borrowed from my policy and I bought options. I bought GameStop. One day I made up to $300,000 in one day when my option put actually worked. Now, it took me $100,000 to do so, but I wasn't as concerned because had I lost, even though I would have lost the deal, my life insurance policies would have still continued to grow as if I never touched it and would have simply been subtracted from the death benefit plus interest when I died. So it was worth the gamble. I don't recommend that to everybody, but it worked for me. I also use it to buy a Lamborghini. When I bought my Lamborghini, you all, my plan was to put it on Turo and rent it out and make a few $1,000s a month. But then I quickly saw that I was actually making more money simply by having it because people were buying my coaching program. Essentially, what I found out is people love having proof. Even though I wasn't really a car person, because I had it, a lot of people wanted to invest in my mentorship because they wanted to learn how they could potentially do the same thing. I've also used it for hard money lending. So what I saw is that a lot of hard money lenders were doing loans of like 16%. I said, well, what if I just did 10, 11, or 12%? And I wrote something down, a contract that said your house is collateral, where if you don't pay me back, I get to take that property that you used the hard money loan for. So everybody paid me back. So my life insurance money was making money as if I never touched it, as well as the interest that I was making off of people. So what I want you to understand, there are many ways to use life insurance, but there are also a lot of misinformation out there and a lot of things that are not true. The biggest thing that I want you to understand is that you shall know the truth, and the truth shall set you free. That is in the Bible, John 8:32. You all, this is how I make my money work 4 to 5 times off the same dollar, right? So I'm gonna tell you how I do that. I'm gonna break it down to you. The first thing that I do is I'm gonna go out, right? Make sure y'all share this, people, and subscribe to my channel so they'll get the same information. Don't hoard it to yourself. That is wrong. Okay, so what I do is I go out, I have my life insurance policy, right? I have my cash value, but I want to go out and I want to borrow against it to buy an asset. But before I borrow against it to buy an asset, what I'm going to do is I'm going to get business funded. I'm going to turn that business funding into cash, and then I'm going to buy the asset. Then I'm going to use a life insurance to pay off the credit card. Why? Because now I'm making money off my life insurance policy as if I never touched it. I'm making money off the cash value. I made all of my points from the credit card so I can travel and do hotels. And now I'm still making money off the real estate property. So I just made money off my money 3 times off the same dollar. And then if I can go even deeper, once I build some equity in a property, I'm going to do a home equity line of credit and borrow from that money to do a down payment to buy another property. Now I made money off my money 4 times off the same dollar while my cash value is continuing to grow. And then I'm going to go out and get a trust, and I'm going to own nothing and control everything. I'm going to make sure that my life insurance, beneficiaries, owners, everything is in the name of the trust, except the insured, of course. By being in the trust, I get to eliminate, if I do an irrevocable trust, I get to eliminate unnecessary estate planning taxes when I die. I also am able to do provisions in my trust, and I also take myself off ownership. Why is that important? Because no one can sue me. No one could take that money from me. It is creditor proof. It is protected, and I get to protect against taxation. So what you have just seen today, you all, you have just witnessed my first YouTube live. Put it in the comments, you all. Tell me what you think, and I want you to go to wealthcreationcall.com. So this is what wealthcreationcall.com looks like. Wealthcreationcall.com is, let me go to the website. Okay, let me share. So when you go to wealthcreationcall.com, see on the top, wealthcreationcall.com. I'll drop it in the chat, but it's wealthcreationcall.com. It says, yes, I am ready to book my complimentary wealth creation call. Now, claim my 15-minute call. I want to stop the threat of taxes from destroying my financial freedom. I want to recapture money that I am losing unknowingly and unnecessarily. I want to securely extend my wealth to the next generation without taking a huge risk. Then when you click on claim my complimentary 15-minute call, what's going to happen is you're going to go to this page where you're going to select the date, and you're simply going to select the time. And then you're just going to put in your information, put in your number, and then you're going to talk to somebody complimentary from my team. This is normally $495, but I'm doing this absolutely complimentary because you sat through this presentation and I want to award you as such. So thank you so much, you all. Subscribe to my channel. Tell a friend to tell a friend. You all are amazing, and I really appreciate you taking the time. And man,